Okay, so hi everyone. Thank you for joining me on today's trading room, Monday, October 4th. And just before I start, I'd like to remind you that this trading room is for educational purposes only. And of course, I'm not giving any trading signals, any trading advice, or um, any recommendations about opening or closing trades. And of course, you can ask any questions, but again, it's not as a recommendation or anything you do is at your own discretion. The trading room is for educational purposes only. So let me just share my screen. And as in every Monday, we will mostly do a quick market review of the high time frames. And after that, if we have more time, then I'll try to go to the lower time frames and maybe see if we have a few, if we have opportunities to take a trade or to see something for the shorter time frames in terms of the next few hours or even minutes. So let's start with the euro dollar, the weekly chart. You can see that overall it's been going down nicely from the monthly or the weekly supply zone. And actually, it looks like it's about to complete or has just completed a double top pattern, more or less. I mean, it's not a perfect one, but in any case, pay attention to the fact that it's last week it closed below this low here, these two lows more or less. And if it closes this week again below this low, it could give a confirmation for the resumption or the continuation of the downtrend. Overall, we are in a downtrend in the euro dollar. It could go a little higher and retest previous levels like this level around here, or even this level around here, previously broken levels or previous lows before continuing down. And again, closing below these lows, we need to see several candles, at least, I mean, if you're talking about the weekly chart, we want to see another weekly candle closing below this level and maybe a retest before continuing down. Obviously, we're not trading off the weekly charts, we're trading off the daily or hourly charts. In this case, possible entry levels, again, could be this level around here, either around the 9 EMA or the 10 EMA if you're using one, or the 20, 21 EMA if they come down here, retest, and then maybe form a reversal pattern, a doji, an engulfing candle, bearish engulfing, a morning star, an evening star pattern, a shooting star pattern, something like that, some sort of a confirmation around this area could give you a nice signal maybe to go short, trend continuation, and of course with a relatively small stop loss above this level. Once we have a close below this level, a stop loss above this level with a target, initial target around this line or around this small demand zone. But obviously the long-term target for those trading swing or taking swing trades, we have a very we have an open area around here. The only case I see euro dollar breaking sharply, to this zone where basically there's nothing here, it's just an open area. If euro dollar breaks down, it will probably happen along with the maybe sharp down moves in the financial markets. If the European indices and the US indices drop, along with maybe commodities or gold and silver, maybe cryptocurrencies. So if we see the euro dollar breaking sharply below, it will probably happen alongside with sharp uh, moves or downwards or sharp drops in the financial markets in general. So just be aware of that. And of course, if you see sharp moves in the financial markets, you can expect also the same in euro dollar, in pound dollar, and other currencies um, against the dollar. Pound dollar is in an interesting formation. It also came down from the weekly or monthly supply around here. You can see this monthly supply or even weekly supply zone here. So it touched it once and twice and then continued downwards. And there is some sort of a, well, it's not an official or a formal or a proper head and shoulders formation, because with a head and shoulders, a bearish head and shoulders, which is a bearish reversal pattern, we want to see either a horizontal neckline or an ascending neckline. This is a descending neckline, which makes the pattern not a relevant or formal head and shoulders yet. It gives the sense here of a bearish movement, and of course we have lower lows. So the pound dollar is also in a downtrend on the weekly and the daily chart, and you can see still, even if it's not a neckline, it's still a trend line, which kind of keeps holding the pound dollar above it. On the daily chart, it broke below, even tested it, but then closed above. So always, if you're trading a breakout patterns, you want to see two candles closing across the line, in this case below the line, and then on the third candle, some sort of confirmation. In this case, there was no confirmation. It broke, it closed above. But even if you entered, let's say at this high, once it closes above, you can just close it. You can wait for another close, but then obviously the risk or the loss could be significantly higher. If you ask me how I would trade, a closure of this sort, let's say I would see, I saw one candle closing below and the second candle closing below. Since it's not a bearish candle, I prefer seeing a retest, but in this case, the second candle was a retest. So the first option is to wait with a sell stop below the second candle. That's the first option. The second option is to enter around the closing of the second candle, but this is with higher risk. And then again, since it started going down but eventually closed above, then I would just close the trade with the loss, if that were the case. But the safest entry is just to enter below the second candle, or to wait for a retest, but then wait for the candle to close below the trend line or the neckline or whatever. Anyways, if you're looking to go short on pound dollar, here is one opportunity, because we had a few lows here. We have a horizontal line, a support line that could turn into resistance. So either on the daily or the 4-hour or hourly chart, here, for example, we may have an initial reversal pattern. So you can maybe take a small initial position, like a starter position, to see if indeed the pound dollar is starting to go short and you don't want to miss it. You can start with a starter position once this reversal pattern is confirmed, with entering at the end of this the third candle of this sort of evening star or other reversal pattern with a stop loss above the resistance line, which was previously support here. Okay, so support, breakout, retest, and now almost retesting again. So this is one option for those of you looking to to go or enter the trade in lower time frames. And of course, if you have more patience or you want to take a longer time frame swing trades, you can wait for a better confirmation on the 4-hour chart or the daily chart. Here on the daily chart, make sure that the daily candle closes below this resistance line, maybe even wait for a reversal candle or a confirmation candle to go short after that. And another option, if you really want to be on the safe side, is to wait and enter even lower. Enter once once the price goes below this trend line again. Okay, you can see how it was tested here. It eventually broke out, but if it goes below this trend line and retests it or just closes below, then it could be a safer entry for those of you who are really waiting for the trend to start going down or developing again. So that's for the pound dollar. Obviously, again, like I said, the overall trend is bearish. And if it closes below this trend line, again, this trend line is going down, and in a downtrend, it's not really a good support or a good line to take as a reference point. But if it closes below it, it's even a stronger signal for the pound dollar to go short. And as I mentioned, overall, it's coming from a strong supply zone. It had its bearish engulfing candle here. So overall, the sentiment is bearish. The only thing that could support the pound dollar, as you can see here, is that it's sitting on top of these two moving averages and on top of previous highs. Okay, so that's the only thing that can make the pound dollar eventually turn around and continue higher. But that's on the monthly chart, so it's only time will tell. In the short term, the trend is bearish, and let's see if the price closes above this resistance line, then it could push even higher, and you will know it by the end of the day. All right, dollar yen. Well, as I always say, dollar yen is not easy to trade because it has, as you see, a lot of sideways movement, even in the last few months, up and down and up and down. Lots of volatility. It doesn't have a clear trend, even though it looks like it's starting to start pushing a little bit higher with a few rising lows. But you can see that last week, as it tried to push higher, the sellers came and pushed it lower, and the trend is not super clear still. I drew this trend line like a couple of weeks ago. It's still holding, and again, for the dollar yen itself, I'm not sure, if it's going slightly up or still, in this sideways movement. But if you want to trade the dollar yen, just trade the short-term time frames, the hourly, the 4 hours. You can see, there are great opportunities with nice trends with the moving averages, breakouts, and retests. So, like in any pair, if you see a breakout or retest along with the trend, it's the safest setup, and you can always take it regardless of the long time or the long-term trend. Just be aware of the fact that it could turn around in the middle of nowhere, apparently, or allegedly. Okay, here, for example, it broke above previous highs. It was a false breakout and eventually broke down. So again, just be careful with the dollar yen itself. Very, very choppy and unpredictable. Dollar Swiss, also just like dollar yen, a little bit unpredictable. And you know, there were these talks about the SNB, maybe the Swiss National Bank intervening and trying to weaken the Swiss the Swiss currency. Maybe, I'm not sure. You can see that, you know, it's still holding above several lines here, and you know, if the SNB sees that it breaks below certain levels, it might intervene. We'll talk about Euro Swiss in a minute as well. So just be careful with any Swiss positions or any Swiss crosses. Overall, on the shorter time frame, again, just like the dollar yen, you can look for short-term trends, but maybe even more than the dollar yen, you can see how choppy it is with not a very clear trend. So better look for trends. If you're looking for better signals or better trends, look for them in the crosses, Euro Swiss, Aussie Swiss, Pound Swiss, and others. If you find a more distinct or a more stable or a stronger trend to trade. So that's for the dollar Swiss. Again, not much to say at the moment. It's kind of moving still sideways without a clear trend. Dollar CAD has managed to come up from this huge demand zone, and it's now stuck in between moving averages on the monthly chart. On the weekly chart, it broke above and could find some support or some demand on top of this zone and on top of these moving averages. It doesn't look very strong at the moment, or I mean, the trend is not very strong. Again, just like dollar Swiss and dollar yen, it's a little bit choppy. So if you're looking for entries, better entries, look for them on the short time frames or low time frames. Again, at the moment, there's no clear trend. Wait for areas of either demand or support, or if you're looking for reversals, reversal patterns, or areas of supply. On the long term, you know, it's kind of stuck in between the moving averages. I would wait for it either to find some support around the previous demand and this 21 moving average, or start going again either higher or lower in a clearer trend. So that's for dollar CAD. Obviously, if oil continues moving higher above 75, 76, if oil you know, starts going much stronger or much higher, then we expect the Canadian dollar to gain momentum and become stronger, and then the dollar CAD will start going lower. But if the if oil, which is currently in a supply zone of itself, if the oil starts going lower, then we should expect the dollar CAD to start moving higher. And since oil is in a supply zone and has been moving up and down in the last few weeks, so is the dollar CAD. So follow those of you who are trading the Canadian dollar. Keep an eye on oil prices as well, crude oil, and especially Aussie dollar is very interesting because it touched the demand zone a few weeks ago, and now it retested an area of support or the demand zone again with the with these reversal candles, and could start moving higher. Okay, again, could be. And Aussie, just like the Canadian dollar, is related to commodities, and if commodities start going higher, so can we expect the Canadian and the Australian dollar to go higher. Nikhil, I'll take a look at Euro Aussie in a few minutes. So these reversal candles or hesitation candles could suggest a potential reversal, but if you want to see real reversal, we have to see it by crossing at least above this immediate, say something around here, this immediate resistance area and moving average. Okay, I'll extend this zone. Okay, we have this zone here of support or demand, and then sort of small resistance and retest and resistance again, and now it's coming again. So for those of you looking for the direction in Aussie dollar, either wait for a retest and a reversal to the downside, or a breakout and a retest to the upside. Obviously, on the short term, the trend at the moment is an uptrend, and the immediate demand is around here. Okay, just pay attention. If you are long on Aussie dollar, just be careful of this area around here, which is a strong supply zone. Okay, you see this huge candle. So this could serve as a tipping point or a reversal point. And another point is around here. Okay, you can see sort of resistance, small support here. This is also an area to watch out of. But obviously, the strongest point is around this supply zone. So for the short term, euro dollar still long, but with a few supply zones and very strong supply zone around here, just above, around 0.73. Kiwi dollar also looks like it could be turning around. But again, the trend at the moment, I mean, there's no clear trend, lower lows, higher highs. So the trend is not very clear, unlike the euro dollar or the pound dollar. But we have this area of support, which seems to continue supporting the Kiwi. And on the monthly chart, you can see that the Kiwi, the Kiwi dollar is supported on these two moving averages, the 9 and the 21. Sorry for that. Let's just wait for it to refresh. On the 9 and 21, and now it's the 21 and the 50. It's in between these moving averages, and again, overall, looks like it could continue pushing higher, but that's long term. On the short term, those of you who are trading Kiwi, the short term is obviously bullish, with an immediate supply around here. The short-term trend is it's a nice uptrend, and again, it found nice support. You can see it on the weekly chart. It found nice support around this support level. Let me just draw this line. Well, more or less, yeah. There's another zone here to pay attention to. Okay, just be those of you who are looking to go long, who are already long on Kiwi dollar, just be aware of this level as well. If it closes above and retests, those of you who are looking to go long or looking for a setup, a long setup to take, this could be also a nice setup. Okay, going, let's here, going above, closing above, retesting, and continuation to the next level. Okay, Euro Pound continues its sideways movement just above this demand and below this trend line. The overall trend is more, well, the sentiment is a little bit more bullish, more bearish than bullish, a little bit more bearish, even though you can see that it's been ranging in the last few months or pretty much all year long. But if it continues lower, pushes lower, the next target, if it closes below this support line, is to the next demand zone. Okay, around like 100 pips more, because it looks like it's, there are sellers coming in all the time on Euro Pound, and it looks like it continues its pushes a little bit lower. I'll get back to Euro Swiss again later. Okay, Luis, I'll discuss it. But overall, what I said is that the trend at the moment is not very clear, and just be careful of any, I don't know, surprises from the Swiss National Bank. But I'll get back to it in a minute when I speak about the Euro Swiss. So that's Euro Pound. Again, a little bit more bearish than bullish, but no clear trend at the moment. Just pay attention to this demand zone in case it holds and pushes the price higher eventually in this, well, sort of descending wedge or descending triangle. Euro yen and Swiss yen are interesting because they're holding above this demand zone or support area, and once this pair picks up a direction, it could move sharply in that direction. Of course, if it closes below, it could move sharply lower. Especially if the markets go down. Usually Euro yen goes down with the markets, not always, but there is some sort of a correlation there. Obviously, if it closes above, especially if it breaches above these two moving averages, then we can see or could expect a stronger move up. The best zone to watch if we want to see a clear decision about where the pair is going is that if it closes above this area of supply, then we have well, a decision to go up. If it closes below this demand zone, then we could expect it to go lower. So this is these are your well, your, let's say the areas where you want to see the decision of the pair. Until then, you can always take shorter time frames. For example, we had this nice head and shoulders pattern, a beautiful reversal pattern, inverse head and shoulders, which gave a beautiful move up to the previous supply zone. Okay, inverse head and shoulders. And this neckline gave some sort of a support, not a clean one, but still sort of a demand zone or a support line from previous neckline of this inverse head and shoulders. So always pay attention to previous areas of decision for example, this neckline, which could turn or continue serving as areas of decision later on in the chart. But again, overall, at the moment, the trend is not super clear. However, what I wanted to say about Euro Yen and especially Swiss Yen, that in the long term, it could, again, not sure until we have a decision, it could continue pushing higher, especially the Swiss Yen. On the monthly chart, you can see this very nice support, resistance line here already in 2014 and 2017 and 18, and then 2020 and beginning of the year 2021, and then breakout, a clear breakout, 2 candles closing above, and then a sideways movement with a small corrective move. And now with this pin bar sitting on the moving averages, the pin bar touching previous supply, previous resistance, and now could continue pushing higher. If there's one pair I would, looking for long positions, that would be it. On the long term, it looks to me like a very persuasive trend and a persuasive or a strong pattern to the upside with this pin bar, moving averages, breakout and retest. Looks like the perfect setup. So taking long positions on Euro Swiss looks more like a safer position. Obviously not anywhere, because as you can see, there are, it could go lower, but look for areas of on the shorter time frames, areas of retest, breakout and retest. For example, let's even go on lower time frames. So let's see, for example, okay, we have something like this. Okay, like this resistance line here, breakout, almost a retest, and if you missed it, you have another retest here, or a few retests, or here, for example. Okay, perfect. You have both. You have a strong resistance, a breakout, a small retest here, and then a even more persuasive or more robust retest here, along with the moving averages, along with the trend. These are the perfect setups, okay? Coming from this demand zone, coming from what you know is a long-term breakout, okay? These are the perfect setups that you should be looking for. And now, again, you're looking for an entry. You can always, let's see. Okay, so, well, looks like it's testing right now this trend line, but anywhere here, if it breaks out, well, you should always be careful because there are lots of supplies around here. But this is the more immediate zone. If it breaks out above this trend line, above this supply, obviously it can find a few more resistance lines around these zones. But the best target for the short term is towards 121, and on the long term, even all the way up to this supply. Let's just let's redraw it here. This supply here above around 122 or so, yeah, more or less. So you have here potentially around 200 pips to the upside on the 4-hour or daily chart. On the weekly chart, I think on the weekly, on the monthly chart, it could take a few days or even a few weeks, but on the weekly chart, we could see the Swiss yen moving much higher, again, unless the Swiss National Bank decides somehow to intervene or weaken the Swiss for some reason. But for this, obviously, talking about the Swiss and the euro, um, I think the Swiss National Bank will intervene only if it sees the euro Swiss going much lower, just like it did at the time below 120. Okay, I mean when it went below 120, much lower than here in 2011, and it intervened. It said it would put as much money as necessary in order to keep the Swiss above, or the euro above 120 per Swiss, and it held for a few years until it took down or removed the floor, and we all know what happened later. It dropped like, I don't know, 30% or so in a day. Again, the trend, it's moving sideways, but the sentiment is bearish. You can see previous month's candle. It doesn't look good for Euro Swiss. However, it could retest this trend line like it did a couple of months ago. It could break this trend line and retest this demand zone. But if it breaks below this trend line, or if it reaches this demand zone, I would be very careful, very careful trading any Swiss currencies, because the Swiss National Bank is unexpected, and they could always do something radical which would weaken the Swiss considerably. And then even if this trend, even if the trend of the Swiss yen looks like a strong, solid trend, it could drop without any warning. So just be careful with any Swiss pairs, and watch out, especially if you're trading any Swiss pair. Just keep an eye on Euro Swiss. It could be violent. It could wipe out your account. And that's what I have to say about Swiss in general. Okay, Euros, dollar Swiss, as I mentioned, the trend is not very clear. I mean, it's been moving sideways for months now. It's not clear, but the sentiment on Euro Swiss is now bearish, and the Swiss National Bank might not like it. Pound yen, just like Euro yen and Swiss yen, has found, again, support around this demand zone, could start pushing higher again. Overall, the formation here reminds or looks a little bit like head and shoulders. So it could turn around and eventually break down. At the moment, it still has nice support around here. And on the shorter time frames, again, those of you who are looking to go long, just trade with the trend. Okay, wait for breakouts, retests. Here, a perfect retest, both of a previous high, of the moving average, sort of a pin bar, and that's a nice setup to go long. You place your stop loss just below this retest area. If you want to be on the safe side, you can even take a smaller position and place your stop loss even lower. But this is a pretty safe stop loss considering this candle. With these moving averages, with previous highs breakout, and then next target, I mean, targets can be around here, okay, more or less. If it's a sort of a Quasimodo, then the left shoulder, or even much higher to this demand zone. Sorry, to this supply zone. Okay. In any case, the risk reward ratio is pretty good. Okay, risk, let's say 35 pips or so, reward, initial reward around 63, 60 pips or so, and second reward, if it goes even higher, towards 130 pips, or anywhere in between the 60 and the 130. So risk reward is pretty good, and these are the setups you should be looking for. By the way, those of you who are who are waiting for confirmations, who are patient, if this candle closes above these two candles, or if this candle closes as a bullish candle, it's also a confirmation, sort of a confirming the retest, confirming the small reversal, and you can take even long here, but the risk reward here is pretty much 1-to-1, which is not as good as taking it after the retest candle. Aussie yen, again, like other yen pairs, also forming this reversal around previous, previous here it was, we had resistance around here and a retest, and now going higher. On the monthly chart, you can see these two hesitation or reversal candles after this downtrend, so it could continue higher. And remember that it's coming from a big supply zone around here. Well, almost touched the base of the supply zone, but we will still have a big big demand zone around here, a strong demand pushing the price higher. It almost touched it, so we could be, it could be just a small corrective move ahead of a longer or a continuation to the upside. So ASEAN could continue higher, and on the short-term time frames, I think, well, now it's not a good place to enter, but if it reaches this supply zone, retests it, maybe goes down, and then retests previous zones like this area here. See resistance, breakout, retest coming up. If it goes down here again, if the trend is still bullish, if the moving averages are supporting, maybe it comes up, retests, and finds support on the 21 moving average or 50 moving average. If you have a retest along with the dynamic support of the moving averages, then you can look for continuation to the upside, with potential move even higher, just because overall it could be that, again, that we are starting an up move to the upside, along with, like I mentioned, other yen crosses like the Aussie yen, the pound yen, the pound yen, the Swiss yen, the euro yen. All this, of course, taking into account that the trend continues. If these demand zones break to the downside, then everything obviously is the other way around. If these demand zones break, if the markets drop and the prices eventually close below these demand zone, then the story is totally different. Then we are expecting much stronger down moves. Again, not only in the Forex market, but also in the financial markets. But at the moment, the trend is more bullish than bearish on in the yen crosses. Let's have a look at the Euro Aussie as per Nikhil's request. So Euro Aussie looks like the overall sentiment now is a little bit more bearish. And let me have a quick look at the monthly chart. So yeah, it looks like, look, I mean, there's a huge bearish pattern here, a very strong pressure from sellers, a continuation below the moving averages. It managed to cross a little bit above, but then a reversal pattern. It's a little bit, the sentiment is a little bit more bearish. What I would, well, let's say this is the immediate zone I would be looking for or looking at. We have previous support here, then resistance, breakout, retest, and now another retest. Now it's coming back here. Okay, this line of 159. And you're asking if it can retest 158. I mean, it can retest it only if it breaks below 159. Obviously, like I said, it feels a little bit more bearish, and even, there is some sort of a head and shoulders pattern here. So yeah, it could definitely break it. If I were trading this pair, I would be waiting for a breakout below 159, maybe a small retest, and then going lower with initial targets more or less around, well, let's draw a zone. There is some sort of a zone here around 158. And on the daily chart, this is just a small zone, yeah? Stronger areas could be around more or less here. Okay, you can see this, where buyers came in here, previous resistance around here, previous support. So if it breaks below, and of course, if we're looking at the target of the head and shoulders pattern with the height of 500 pips, if this pattern is, confirmed, completed, and manages to give back its full height, then 500 pips could go even as low as, as 154 to this area, to this demand zone. But this is a very long move. Okay, this is not something that happens in a day or two, not even in a week or two. But we have here a very nice demand zone. You see a deep retest here, another retest here, and then a move up. 500 pips is just a little bit above this demand zone, maybe to this area. But again, this is if and only if this neckline of 159 breaks to the downside, confirmed with 2 closing candles below, preferably even a retest. Those of you who are looking to go short at the breakout, the 4-hour chart or the daily chart just closes with 1 candle. It's possible. Do it at your own risk, maybe with just a starter position, with a small position, and with a stop loss, again, depending on the pattern around this neckline. But you can place an initial stop loss above here, unless it forms a few more highs or lower highs above here and breaks down, then you can place your stop loss above these lower highs. Let's say it goes down, goes up, and then breaks down, then you can place your stop loss above these lower highs. It doesn't mean it cannot retest and then continue lower, or even negate the pattern and continue higher. Everything is possible. It's all about probabilities. But those of you who don't have the patience to wait for a confirmation and a retest, then you can start with a smaller position and a stop loss above the recent highs before the breakout. So I hope, Nikhil, I answered your question about Euro Aussie. If anyone else would like to review any other pair, go ahead and do it. You can write down in the chat box, and you can see that Swiss yen continues its move higher very nicely, breaking above this this trend line and this demand zone. Sorry, this supply zone. So the trend continues higher. And again, if you're looking to go long, maybe even a small retest, you know, just going down to this trend line, or you know, look at this beautiful trend. Just waiting for a retest would be nice before entering or going long. Let's have a look at the pound CAD. Yusuf. Yusuf Sidibe, how are you? Well, good to have you here. Doing very well. So I'm happy to see that you're doing incredibly well with your account. Well done. Pound CAD. So, well, yeah. Every time I look at this pair, I ask myself, why even trade it? I mean, look at it. For weeks, it's been ranging or going sideways. Obviously, currently the sentiment is bearish, but since it's, you know, ranging sideways for so long, now it's bearish, tomorrow it's bullish. Obviously, now it's sitting right on top of this demand zone, a small demand zone, not a very strong demand zone. When I'm looking for, you know, supply and demand, I'm looking for areas where big moves initiated, where big moves started and turned the trend and formed new highs or new lows. Here, it's just in the middle of a range, of a never-ending range. So I can't tell you much about the trend. Obviously, there's a small reversal pattern here just above this demand zone. The overall trend is still bearish. Is it forming maybe a small inverse head and shoulders pattern? Could be sort of like a shoulder, head, and maybe another shoulder. The only thing I would say is that if it goes above this neckline or alleged neckline, then I would expect a continuation to the upside, especially since it's coming, this potential inverse head and shoulders is coming from a demand zone. So you have a bullish pattern on top of or coming out of a demand zone. If we break above this neckline, then it's even a safer move. If you're looking for the shorter time, for even a shorter time frame, and again, I would be looking, and this is not a recommendation, obviously, you know, do your analysis and trade at your own discretion, but I would be, because of this pattern, because of this demand zone, I would be looking for long position opportunities, okay, around this area, just because this could be, again, could be the right shoulder of an inverse head and shoulders pattern. Again, you can see that it's not perfect and it's not very clean, but if I see a closure or a candle closing with a bullish sentiment above these moving averages or above, even above this area here, okay, something like that. If I see a closure above here, I would be looking for a small position to go long, and then I would and then obviously taking additional long positions above this neckline. Now, if it closes below this low or below this demand zone, then the story again, as always, is completely different. And then we could expect even a lower or a move even lower to this demand zone. Not much, but this is also this could happen as well. So again, it's interesting to see whether we're forming a head and shoulders pattern here, an inverse head and shoulders pattern. I will follow it in the next few hours and days, and it's interesting to see what comes up with this pound CAD pair. But obviously, the overall trend is no trend. It's just sideways movement. Just be aware of these demand zones at the bottom. That's what I have to say about this pair at the moment. All right, guys, if there aren't any additional questions, then I would like to thank you for attending today's trading room. Have a successful trading week ahead. Pay attention to the Swiss yen, okay, for potential, retest after this breakout of this trend line. And overall, as we discussed, Swiss pairs could give you some interesting opportunities for the upside, maybe for the week ahead, as long as the markets stay stable. And my name is Yannick. Thank you very much. Thank you. May the gods of pips be with you this week. Trade well, trade safely, manage your risk properly, and you're always welcome to contact us. Ask for support with anything you need. Thank you. Take care. Good luck, and have a happy and successful week. Bye-bye.